As we approach the dying days of the first half of 2017, the price of oil has had its worst first half percentage fall since the late 1990s. Brent is down in excess of 20% on concerns about a global supply glut. The FTSE 350 Oil and Gas Producers Index is down 11% and the oil services sector down 28% over the same period. So a return of almost 7% in the sector looks good. That's the return of the oil bucket list put together by Malcolm Graham Wood. Malcolm writes Malky's blog and he joins us now with some more of this. And we talk to you every so often about this, and you had a wonderful year last year. And as I said, you've returned 7% in this first half against the backdrop of a very weak market. Appraise what's gone on.
Well, since the 1st of February, when the bucket list is down, the oil price is down almost exactly 30%. Ironically, the bucket list came out almost to the day that the oil price peaked. And if you look at last year, ironically, that was the day that the oil price troughed. And so it's not surprising to see some very wayward movements. And in fact, looking at the list of stocks, I mean, they go from being up 60 or 70 or 80% to being down that. Some of that is down to changes in the portfolios, or success or otherwise of their drilling campaigns, but mainly down to the oil price and the concerns that investors have in smaller oils.
Yeah, I want to pick up on one of them, which in fact appears as a starred name on our list there, because it's Ithaca, which is now out of the index, isn't it? It was up 13.5% actually when it came out. This is on a takeover. Explain what's happened.
Well, Ithaca was the star performer last year. It was up 600% nearly, and so the market obviously knew that something was happening, and they were bid for at the beginning of the year, and as of the beginning of June they've disappeared, so that leaves a space. So at the end of, after 6 months, I'll be replacing them with another stock, and I'll probably move Bowleven out of the market as well. We'll come back to that in a minute, but they're effectively in run-off at the moment, so we may have a couple of changes. I try not to change the index if I can help it. The reason it's called a bucket list is that it's got a bit of everything in it, and we expect things to have good and bad times.
Yeah. Let's pick up on Bowleven, another stock you've got coverage on, up 8.3%, I think, since the 1st of January. As you said, this bucket list is put together on the 1st of Feb, but since the 1st of January, it's up 8.3%. Bowleven.
Bowleven was in the process of selling off a couple of its assets anyway, and then some investors came in and decided to effectively close the business down. They've got rid of all the management, and I call it in run-off. They've sold off part of their business to Victoria Oil and Gas, and so it's no longer really something that it's appropriate to be in the bucket list. So I've got a sort of wait list of 2 or 3 reserves to come in, and they'll come in as and when it's the right time occurs. Any time in the next few weeks, I'd have thought.
Yeah, Victoria Oil and Gas, you mentioned, another one that's certainly worth watching. In fact, has moved from the 1st of January up, I think, around about 20%.
Yeah, the stock is up 25%, and had been up a huge amount more beforehand. The market have got a little bit concerned about this. They're expecting results from their gas drilling in Cameroon, in West Africa. Fun enough, I went to visit this company a few weeks ago, and everything is going very well indeed. This is one with despite being up 25% against a falling market, will I seem to remember saying before, when they were sort of 60p, that they would be cheap even sort of 4 times of that. I think the valuation is 200p or could be more. But people forget about this. They put it in with all the oils, and in fact, it's a gas utility, really. It drills for gas, it builds the pipelines, it sells it into a market which is massively short of gas. So in Douala, which is the second city, but the biggest city in Cameroon, could take 10 million scuffs of cubic meters of gas a day, and they will sell them as much as they can get out. Don't forget, they have bought, as I said, a bit of acreage from Bowleven in Bomono, and once that gas comes on, they'll be able to get to the other end of Douala. A lot of these African states have discovered that generating electricity is best done through natural gas, which they have themselves, not the previous way of doing it with diesel and fuel and that sort of stuff.
Yeah.
So cleaner and cheaper.
Yeah. You mentioned Ithaca doing very well last year and, of course, 13% this year. Hurricane Energy is one I want to pick up on next. Now, this is down 29% this year, but we must look at that in the context of its stellar performance last year.
Yes, I mean, they've spent the last 2 years drilling successfully. Every single well they drilled came in, and they've got a massive amount of oil underneath their acreage in a number of different wells, which, like Lancaster, which they're going to develop straight away. Now, I think there are two reasons for the market knocking Hurricane a bit. First of all, they're fully aware that, the shareholders were told at the Capital Markets Day a couple of months ago that there would be a need to develop this. The early stage development of Lancaster, called the EPS, is going to cost $400 million. And you don't go finding oil without then having to develop it. So the market have got the heebie-jeebies about a potential fundraise. There will be a fundraise, but it won't just be the equity market they go to. I'm expecting possible farm out and some debt as well. So I don't think it's the end of the world. I think at this price, Hurricane is one of the cheapest stocks in the market. I think the asset value of this stock is way, way in excess of the current market price, and patience will be rewarded. Yeah,
36 pence is what you pick those shares up for at the moment. Sound Energy, we've spoken a lot about Sound Energy, and of course Sound Oil as it was, and a lot about what James Parsons and the team are doing at the company. And I know that they're still waiting on some good results, but in fact it's a company which has performed very well.
Yeah, I mean, it's already up 10% this year, which is extremely good, and it's a really crucial couple of weeks for Sound as it happens. Their existing stuff in Morocco called Tendrara is being tested at the moment, but actually the excitement is in a different part of Morocco where they're drilling 2 wells in a place called Sidi Mokhtar. I'm expecting news from that soon, but the real sort of cherry is going to be a thing called Badile. And you and I have spoken about Badile for several years. Because it's in Italy, it's taken a very, very long time to drill. But they're drilling at the moment. I'm expecting news any time soon. The very preliminary news there was when they went through the cap of the reservoir and they did have a big gas flow. That means nothing, but it is encouraging. But it means nothing in the sense that it may just be a little bit of gas at the top. So we're waiting for news from Badile. If that comes in, I've got 50p a share. Well, obviously won't add 50p a share to the share price, but it would be extremely useful for Sound.
Yeah, one of the other projects that James is working on, which is not on your list, is Echo Energy. I'm hearing more and more about this morning. Does that begin to attract you?
It looks very exciting. It'll probably go into the bucket list at some stage because it's got a strategy of going into gas in South America and Latin America gas, where they already have infrastructure and pipelines and significant demand, but where a few years ago the majors walked away from, is a very, very opportunistic move. The management of Echo has been built up very rapidly, and they've got a brand new CEO called Fiona Makele starting on the 5th of July. They've just appointed a finance director. VP of exploration is first rate. They've announced their first deal, which is a move into Bolivia. Very exciting. I mean, the share price has come back a wee bit, but this thing's moved around big ways at the moment. I fancy Echo to have a go. Probably got the same sort of shareholder list as Sound.
Yeah, indeed. Let's move on to an old timer in the sector, Premier Oil and Gas. Yeah. In fact, I think this is probably one of the largest stocks in this list, isn't it?
Yeah, and it still is. And sometimes I wonder why I keep it in the list. And the reason for not having it in the list, of course, would be it's $2.5 billion of debt. But actually, they have sorted out the debt over the last few months. And the reason I've got it there now is that there are 2 or 3 big-time assets which I'm expecting them to farm out. They made a super acquisition a little while ago, which has given them a gas field in the southern North Sea called Tolmount, which is way better than they expected it to be. So I'm expecting that to go, and either to farm out or to find some sort of partner for Sea Lion, which is a development in the Falklands, which at long last is probably only maybe a year, if maybe less, to sanction.
Yeah, talking about the Falklands, Rockhopper Exploration is on the list. We've got to talk about this again. I think actually if you look at the numbers there, we've got a drop of 5.8%. But I mean, this is a share which is trading at 20.9 pence. This was almost £4 a share, wasn't it? 5 years ago?
And I mean, last year, as I explained in the sort of rhetoric for the blog in February, it is completely dependent upon what Premier does, because it's got a much bigger exposure to sea line. And at the moment, they're sort of just moving on with the feed developments and so on for sea line. And when that happens, the shares will recover in a big way. In the meantime, actually, what is probably not known particularly well is that Rockhopper are building quite a nice portfolio in what they call the Greater Mediterranean, and has been involved in Egypt in particular, where they've had a couple of quite good discoveries. So all that G&A costs are actually paid for now by incoming revenues, and there's potential down the line for sea line. This is a slow burner, but...
so what's in the share price at 20 pence then? Which asset is representative of this 20 pence
Well,
a share?
I mean, the reason it's 20 pence, not 80 or 100p, is that people are not convinced yet that sea line will go. Because sea line will be worth £1 a share of anybody's money if it goes ahead. When you see the market getting the jitters because of the oil price, and therefore potentially less people investing in it, the market's not prepared to give it a go. But I would say that, underlying basis, Rockhopper is extraordinarily cheap at this level. And it may not happen straight away, but it will happen at some stage.
Let's move on to Ferro, another one you've been covering for a couple of years. Yeah,
Ferro is probably the new blue chip, sort of blue-eyed boy in the sector that's probably taken over from Ithaca. Ferro is very well run. It's North Sea, but primarily Norwegian North Sea. So it's very tax-efficient dollars it's earning. It's probably got one of the best exploration departments in the sector. As I say, it's very well managed. It's strongly financed, and if you were to pick out one stock in terms of quality management, financing, and acreage, it would probably be Ferro. I would have no hesitation in recommending this stock at the moment. There's plenty more to come. They just had some good news the other day. A couple of their big developments have got the go-ahead, and as I say, very Norway-faced, which is extremely good news for the longer term.
Yeah, okay. Amerisur, another one on your list. Again, another one we've spoken about before.
Yeah, this has fallen for a couple of reasons. This is Colombia. And again, I visited them just before the end of the year, and people are a little concerned that it's taking a while to build up production here because they've got this OBA pipeline, and they've only got 5,000 barrels a day going through it at the moment. I'm expecting that to increase dramatically. And there's two reasons for that. First of all, they've continued to have drilling success in Platanillo, which is the area at the south of Colombia where nearest to the pipeline. But they've also had a potentially really substantial discovery in the north of the country with ONGC. This could be a really big discovery, certainly bigger than anything they've got at the moment, and would produce enough revenue to easily see their short-term performance of 7,500 barrels a day, and their longer-term projection of 20,000 a day will be sorted out by this. So, short-term, the market have got the jitters about it. There's no reason to. It's very well run by John Wardle in Colombia and the team over here, and I'd be very happy to continue recommending Amerisur.
Yeah, another one that's disappointed the bucket list this year is Pantheon. Last year, it outshone, I think, in all respects, I think, didn't it?
Yeah, they've had a really difficult operational time in the first half of this year. And when I say operational, meaning literally at the wellhead, where they've had all sorts of problems with drilling 2 wells, which both took months and months more than market expectations. And the market hates seeing that when there's no news coming through. They always think it's going to be bad news. It's not actually bad news. I think they will now drill and deliver gas from the Wilcox. There's no doubt that the long term has been delayed a little bit. But Pantheon is a very good company. Jay Cheetham, the CEO, is a very solid guy. The people they work for are ultra, if anything, too conservative, but I'd rather have that than the other way around. I think that, I certainly haven't bailed out on Pantheon. It's taken longer than I thought, but I think it'll still come through.
Okay, that's currently 57 pence a share. Let's move on down the list. FAR Limited.
Well, FAR, which is quoted in Australia, is in the same consortium as Cairn, offshore Senegal. And if you want to play that FAR is definitely the way to play it. I actually took Cairn out of the bucket list at the end of the year. I already have exposure to the Senegal development through FAR, which hasn't moved. But FAR, who have an ongoing dispute with the partners whether when Conoco came out of that portfolio, they actually sold it to one of the Australian companies, Woodside, and there's no reason that that's actually been formally approved yet. Now, since then, FAR have been backed by CNOOC, and CNOOC is obviously a major league Chinese company, so they've got massive backing. And apart from that, that area in West Africa is hot. BP have farmed in with Cosmos in Mauritania and Senegal above them. They've had action from Total. All the way down there, there's big gas discoveries and big oil discoveries. I wouldn't worry about FAR. It's full of value, and in due course, I think we'll see that coming out in the share price.
You have a good reputation of picking stocks, certainly picking early stocks, and SDX is an early stock, wasn't it? It was, I think, listed last year, wasn't it? Came onto your record this year in February. Came
into the bucket list. I'd known about it since last year. I picked it up very strongly in June of last year when I first met with Paul Welsh, who had very, very strong plans for this company, and he's delivered the goods. He's done all the things I want to do. You know, they've had a discovery. This is Egypt, so we're talking about big discovery in the gas and potentially oil, maybe 5 kilometres up the road. But the rest of it has done very well. They made an acquisition. They took over most of the assets of a company called Circle Oil. And so they've got some potentially very exciting assets which match with their own assets in Morocco. And then earlier this year they did a big placing which was more than 2 times oversubscribed. So they've got a really strong institutional shareholder base, a good following of retail holders. SDX up 60-odd% since the year has started already. Absolutely as proud as punch that they've done so well, and I expect them to continue to do well.
Yeah, okay. You mentioned Sidi Mokhtar, you mentioned Morocco, and the management at Jersey Oil and Gas had a record of previously being in that area, hadn't they? But Jersey Oil and Gas is a neat little stock to be in on at the moment.
Yeah, I mean, the CEO of Jersey was the CEO of a thing called Longreach, which were down in Morocco. But now Jersey Oil and Gas is drilling, or will be drilling in the summer, a big well in the North Sea called Verbier, and this is one of those stocks that has to go into the bucket list, because if this was a success, it will be huge for Jersey Oil and Gas. And even if it isn't, it'll probably run up to the well. So I've been advising investors to take an interest and then look at it in sort of July before the well's drilled. And if they've gone up a lot, you could probably take a bit of money off the table. But keep an investment in that stock, because my guys at Statoil tell me this is in their top 4 of potential wells to drill this year. And Statoil is one of the biggest in the super majors, and they rate it very highly. So I think that Jersey is very, very interesting play, and I think it'll run up big time ahead of that drilling which is scheduled for August.
Yeah. Okay. And finally, Aminex.
Yes, I mean, Aminex has been a fair bit higher, but actually is still up something like 40% on the year because of their discovery and the Toria 2. And that was a difficult well to judge, because actually when it came in at 17,500 scuffs, people thought, it might have been better than that. But actually it was only that amount because they'd had a big blowout of gas and they'd muddied up, as they call it, and so in order not to cause a bit of grief, the company said to me that if they hadn't muddied up, they'd have blown half of Tanzania to bits. And so, I think that for the longer term, I've been waiting to put Aminex into the bucket list, because I think this is a valuable asset, and I think that the management there, if they get a decent offer for the company, they would take it. But in the meantime, as I was saying with Victoria Oil and Gas, the countries in Africa need as much gas as they can find. So finding the gas down there is going to be very good. I'm convinced that the management of Aminex is doing the right thing, and very happy to keep recommending it.
Of course, the background to all this is the price of oil.
Yeah.
Here we are now at $40, $42, $45 a barrel, depending whether you're looking at crude or Brent or WTI. Where is this going? Because it underpins the whole approach to the oil sector.
It does, and it's always a short and sort of long-term situation for the oil price. Short-term, the market is concerned because the unholy alliance of America, Libya and Nigeria, who are all producing flat to the boards, and none of whom are involved in OPEC quotas, are probably producing more than the increase in demand, and that's offset by the OPEC and non-OPEC cuts. Ironically, the OPEC and non-OPEC cuts are holding tight. OPEC are cutting by about 108%, which is good. Non-OPEC at 100%, so it's about 106%. So they're cutting by more than they said. And they announced at the last meeting they were going to run it over to March. But the market wanted more than that, so they wanted a bigger cut. But demand kicks in at the end of this year, and as long as we don't have a continued build-up in stocks, I think we'll be okay. $60, which is my target, is probably a little high at the moment. I try not to change it too often, so I'm reasonably happy. I think the action may be third or fourth quarter weighted, but I'm still convinced that the oil price won't sort of fall dramatically, and will be in reasonably good nick by the end of the year.